All right, guys, welcome to episode 10 of Chasing Mastery. I got Hunter. How do you say your last name? Zier?
Zier, you got it.
Zier. So I got Hunter Zier on. He is one of the Dream Team's lenders. And what company are you with?
Heritage Home Loans.
Heritage Home Loans.
Yes, sir.
So he'll be able to let you guys know all the ins and the outs of the mortgage industry, stuff to look out for, mistakes not to make or to avoid. That way, when you go to buy your first house, you're not going to be just scrambling in the dark.
Yeah.
So a big question a lot of people have is, well, I don't want to save up a 20% down payment, especially with houses being four or
hmm
$500,000. Is that just a misconception? Can you get in lower? And what are some common misconceptions that people have about buying a house?
Yeah, it's kind of funny. I think a lot of it might be, the lending world has completely changed over like the last 10, 20, 30 years. And so, like, a lot of people growing up, maybe their parents or uncle or aunts or even grandparents gave them, what their perception of buying a house was from the mortgage side and the real estate side. And really, the lending world and the real estate world is just constantly evolving, constantly changing. And so, something that might have been true 10 years ago or even last year might be different now. And
Mhm.
so, like, to answer your question, a lot of people, I would say back in the 80s, 90s, maybe even in the 2000s, would push for that 20% down. And the lending laws were a lot different back then. And most people were putting a lot more down, but that was also because the price of homes were a lot less. And so, a lot of the lending, the minimum down payment requirements have changed. And so there's anywhere from 0% down to 3 or 5% down, depending on your loan program. I remember a couple years ago, I was talking to a client and he was a veteran, and he was basically, this is what he told me. He was like, yeah, I'm saving up $40,000 to purchase my first house. And I was like, yeah, but you're going VA, right? And he's like, yeah, but I thought I needed to put 40 grand down. And I was like, who told you that? And it was like somebody that, that he ran into in the military, and he'd had that belief in his mind for literally the last 4 or 5 years. And so he'd spent that last 4 or 5 years trying to save up the 40,000. And I was like, man, you don't have to do that. You can if you want, but it's technically 0% down. And he was
Mhm.
like completely baffled because in his mind, he thought that was the number. And so he'd put off buying a house for years. But then we got him bought, and he did put a little bit down, but he didn't have to put what he thought originally was required to put
Yeah.
down on the
Yeah,
house.
like a 10
So
to 20%
yeah.
down. And especially coming from, yeah, a lot of millennials kind of grew up in that housing market phase
hmm
of like their parents lost the house. Housing could be a bad investment. You got
Right.
all the Dave Ramsey people out there, which love Dave Ramsey. I think all his ideas on credit and everything are great. But I
Yeah.
think a lot of people take that, well, I have to get a 15-year loan and I have to put 20% down. That's not realistic for most people
It's
our
not.
age, even millennials in general. Like, unless you're making $100,000 $200,000 a year,
Yeah.
it's very tough to save up that kind of money, especially with inflation at what it is today.
I agree. And, everybody's situation's different. And, buying a house isn't for everybody today. Even though you and me, we're both in the real estate world, and we believe strongly in buying a house, but, somebody's situation, maybe they're in a lease and hey, they just want to wait 6 months to maybe boost their credit up so they're in a different loan program. And, we're big advocates of buying houses, but maybe it's not the right time. But if we can build that person a plan to be able to, in that goal, whatever it is, 6 months, 12 months, that's kind of what we're here to do.
Yeah, I hear you there. So I'm going to jump into some of these questions
Yeah.
from Tribe of Mentors. If you guys don't know Tim Ferriss, he has great books out there. A lot of his books kind of go into like just random stuff because he takes a lot of his podcast guests, which
hmm
range from like athletes to, world class business leaders and even like Gary Vee, Tony
Yeah.
Robbins, all that fun stuff.
People were trying to aspire to be.
Yeah, exactly. So do you have any books that you've gifted most or 1 to 3 books that have really changed your life?
Yeah, so the a book that I've actually bought probably a half a dozen of these books, and I've given them out to whether it was a client or maybe a industry partner or somebody that I've worked with, and that's Richest Man in Babylon. And it's a really good financial book. It's, in my opinion, it's the best one out there that I've ever read. And it's honestly, it's a really small book. You could probably get through it if you were just like crank it out in like 2 days. I think when I first read it, I couldn't put it down, and I read it in like a day and a half.
Yeah,
And it's like
that book's great.
it's a super good book. That's probably my favorite financial book. And then one that I haven't read this for like probably 8 years, but I it was so inspirational to me is Good to Great. And
Mm,
some certain lines in the book I've just like really taken to heart. And it's like every couple months or every couple weeks, it just kind of pops up, and I just like it's kind of inspiring me, or it really is talking to me in that moment in life. And so that's another good one. I don't know if I have three, but those are
nice.
two.
That
Yeah,
works.
yeah,
I'm gonna have to check out Good to Great because I haven't read that one yet,
it's a good
and
one.
I'm a big reader, so I always like to check out, any recommendations that we get out there. And do you have a purchase of around $100 that has most positively impacted your life in the last 6 months to a year?
$100.
Yeah, you can also go back a little farther, or if you want to go up a little bit, that's fine too. But
You know,
something that
with
the average
inflation these days,
person,
it's kind of hard to find
yeah,
something
I
that's
know. Now it's more like, oh, with when this book was written, it was probably $100. Now it'd be better at like 150, 250, somewhere in that
exactly.
range.
I bought some game cameras this weekend that were like
Nice,
$110
nice.
for I put them up. I put two up at two different deer spots. I'm already getting pictures. So
There you
I'm
go.
a big hunter, so it's something I'm trying to get a little jump start on the season, because years past I'm like I'll just get super slammed in business, and then I just like am just totally procrastinate doing it. So I've been able to actually start early this year, which is nice.
Nice. Do you have any good hunting stories? Anything crazy?
Oh, yeah, I got some, maybe not for camera, but
Maybe off the cuff later on. Yeah.
yeah, I mean, I one that was really cool. I got a bear with a bow a couple
Oh
years ago.
wow,
Yeah, in my tree
that's
stand.
wild.
Yep,
Dang.
like fit like 14 yards away. It
Dang.
tried to climb my tree stand,
You're
and I was
like,
just like,
nope.
well, that almost what happened. But yeah, he like jumped on my tree. He was too big to climb it, but like he was kind of sniffing the air. I think he could tell. He knew something was up, and I was just like looking down at him. And I was like, do I grab my pistol? And it was like behind my tree, because that's where my
Mm,
backpack was. And so I just like stayed super calm. And finally he got down and was like walking away. And that's when,
nice.
yeah.
Got a little shot off.
Yep.
That's awesome. Have you had a failure or apparent failure that set you up for later success?
Yeah. Back in college, I did a lot of like day trading, like with stocks and stuff, just because like
Nice.
when I was like 14 or 15, I got my own trading account, and
Yeah.
I had just like $500, and I would just like kind of buy and trade stocks just as like a young teenager. And I just kind of soaked up as much information as I could about like mutual funds and stocks and penny stocks, which are like below $5.
Yeah.
And when I got into college, I guess I got like too cocky, and
Yeah.
I started playing with like bigger money. And I started like, because once you have a certain amount in an account, you can actually like over leverage yourself like 5 to 1. So if you have $1,000, you can actually borrow up to like 4,000. So you can have
Oh wow.
5,000 to trade with. And so
Yeah.
I was doing that stupid stuff. And like one morning I lost like 10 grand. And
Jeez.
so then I had to just like, I was like, okay, I'm gonna like humble myself, start from ground zero. And I kind of just like relearned everything that I thought I knew. And I was able to make it back over the next couple months. It took me about 3 months to make it back, but I was just being young and stupid.
Yeah.
But that was a pretty, I don't know, it was a pretty big failure for me back then, and it was kind of a humbling experience for me.
Yeah.
Yeah.
Yeah, I think having some of those early wins, especially when you're younger, like I remember 18-year-old
Hmm.
Casey, it's like, oh, wow, I'm on top of the world. I just doubled my money in a matter of weeks or a
Right.
day or whatever it is. Like nothing can set me down. And then all of a sudden you lose 5 times that. You're like, oh,
Exactly.
that hurt. That
Yeah, you're
hurt.
like you thought you were doing it good, and then I don't know, it can be, if you don't know what you're doing and you don't do it the right way, it is a little bit like gambling.
Yeah,
If
it's
you
like the
just
casino effect.
Yeah,
Yeah.
yeah, and yeah, yeah. So
Yeah. Like, oh, I got $100 on the slot machine, and then you lose $300
Ex-
thinking you're going to win more. I was like, nope,
exactly.
doesn't always work like that. All right. If you had a giant billboard, metaphorically
Hmm.
speaking, that you could get a message out to millions or billions of people, what would you say and why?
I would probably just keep it simple and just say never give up. I don't
Nice.
know if I would maybe just say that on it, but like in life, business, relationships, faith, uh, there's always those ups and downs. And even if you're not like taking risks, like life can beat people down, and it's like really about getting up that matters, and like never giving up, because it's really easy like to take that loss, like the question you're asking, like what's a failure of yours. If you don't turn that into something else, then that can really kind of mark you for the rest of your life if you don't get up and try and move on from that.
Yeah, very true. And I think a lot of people do kind of let, especially once you get older and you've had some big wins, but then some
Hmm.
big losses. Like I know, parents or parents' friends where it's like, oh, yeah, no, I lost my shorts in this. I'll never touch that again or don't want to do. But oftentimes it's like just having one or two failures doesn't mean you're a failure. It just
Right.
means maybe the timing was bad. Maybe you had a little bit of lack of information in a certain area. Like you can keep going
Yeah.
and not just completely give up. So, yeah, I love that. It's great. What is one of the most worthwhile investments you've ever made? Could be time, money, or energy.
I'll tell yeah, I'll definitely jump on the money one. I do have some real estate investments, and those have been by far the best for me. Like I know a lot of people have different philosophies on like investing. Me, I'm extremely for and probably a little biased towards real estate investing. To me, the ROI, tax write-offs, passive income, I don't think you can beat it, because it is completely passive. Like you're literally getting paid as you sleep if you set it up the right way. And I don't think there's much, if any, other investments that are like that. Like you put your money in the stock market. We see what happened last year and even this year.
Mhm.
You have zero control over that. You go put 100 grand in. You don't know if you're going to make 10% on that money or if you're going to lose 10% that year. In real estate, if you're buying an income producing property and you're in it for the long term, you really don't care if the market drops 5%, because you're still getting that monthly residual income on the rents, and you're getting a paycheck every month. The stock market, AT&T, Verizon, even like Google, they're not sending Casey and Hunter checks every month.
Yeah.
Like that would be nice, but they don't do that. Even dividends is like maybe once a quarter or once a year.
Yeah.
So I
Usually they're not as nice as cash flow from real estate.
Exactly. Yeah. So I'm a huge proponent of like income producing properties, and that's something maybe in another segment we could talk about. Kind of like for if you're a first time home buyer, or just kind of dipping your toes in the water. There's some easier ways to get into investing, I think, than other people think. There's some like ways to house hack and stuff.
Yeah. If you could go back and tell early Hunter something like Hunter at 16 to 20, give him one or two pieces of advice that you know now that you either wish you could have avoided or done differently. What do you think that'd be with real estate investing?
Yeah, when I was younger, I definitely was. I mean, I still struggle with this. Just not being patient, and just trying to try and getting to Z before going to A, B, C, D. Right. So
Mhm.
trying to get to the end result without going through the journey, and that's probably what I would just tell myself is like be patient, enjoy the process, trust the process, and it's not the end result. It's really that journey that you're going to learn, and that's going to take you to where you want to be.
Nice, love that. Yeah, it's hard to skip that and like everybody dreams of the end, but nobody
Hmm.
wants to go through the bullshit to be able to
Yeah.
actually get to it. And
Hmm.
you got to learn to love the process,
You
otherwise
do.
you're never gonna continue on with it.
Exactly.
Nice. What is an unusual habit or absurd thing you love?
Certain thing or habit
Yeah,
that I
just
love.
an
Oh,
absurd thing.
let's see. I mean, I mentioned hunting. I don't know if that's crazy. I like fishing. I like surfing and snowboarding. I
Nice.
don't know if those are crazy habits,
Yeah,
but
not too crazy, but yeah, you like to
yeah.
get out, do some
Oh,
sports.
I got one. Like this isn't what I do anymore, but I used to do a lot of tree climbing. We'd have like properties, or we'd like go hunting, and I have to like climb trees.
Mhm.
I've probably climbed a 120-foot tree before. I
Nice.
free climbed one time, and I was completely stupid. I don't do that anymore. But yeah, it was yeah, just dumb, young, stupid.
Just
But
climbing trees,
yeah,
being a teenager, young
yeah,
adult, you're like, "Ah, I'm invincible. I can climb up there. Watch me."
exactly.
What made you stop doing that?
I don't know. I guess I got older and a little bit more
Yeah.
smarter, and I was like, after that one time I did it super high, I was like, because I didn't really know how high it was until I got to the top, and I was like, yeah, I probably shouldn't do this again if I really
Yeah.
value my life.
Yeah, this could end very badly if I were to
Yeah,
make one misstep. Going up's fun. Coming down, not so fun.
exactly.
It's
Yeah.
like, oh man, if I slip here, this could be
And
the
so
end.
yeah, so now I'm like more careful. Like I with hunting, we do a lot of tree stand stuff, and so we're anywhere from 30 to sometimes 40 feet up in a tree. But like I'm super safe now. I'm always climb with gear on. I'm always strapped into my tree just because you don't know. And
Yeah.
it's that one time that you slip or the one time you forget to strap in that, that you could literally die.
Yeah,
So,
and when you're under 26, you're still on your parents' health insurance if they have health
mhm.
insurance. So you're like, "Ah, if I get hurt, I'm probably gonna be okay." And then
Yeah.
you hit 26, you're like, "Man, I'm not on my parents' health insurance anymore. If I fall here, that's gonna be a very expensive fall." You
Yeah.
break an arm and you don't have health insurance, or even if you're paying for your own, now you gotta pay extra because like,
Mhm.
"Oh, this guy's an idiot. Let's
Mhm.
charge him extra
Yeah.
because he's probably gonna do this again."
Yep.
Yeah, that's fair. That's awesome though. What advice would you give to a smart driven college student, and what advice should they ignore?
Ooh, that's a good one. Let's talk about the advice to ignore. I think, and I can attest to this as well. A lot of younger people, I think, will try and listen to like 30 different people and take 30 different advices. I would say minimize that to a very small handful, if not just like two or three people, because you can get mixed information. Like if you're going to listen to Grant Cardone in one hand and Dave Ramsey in the other, like they're almost polar opposites on their belief.
Mhm.
I think that they're both great in what they do, but you can't say, "Oh, buy a house cash," but then go borrow as much as you can. Though that's
Yeah.
conflicting information. And I think a lot of younger people will listen to too many voices and then it just gets muffled out and then they get nothing done because there's just too much information that just doesn't make any sense to them. And then advice, I would say, put as much investment into yourself. Whether that's YouTube, reading books, you don't even have to go to college. There's so much information out there, whether it's on finances, real estate, invest in yourself. That's the biggest investment you can make.
Nice. Do you have any investment podcasts that you listen to regularly, like outside of college, where you're like, this is where I get my information and this is like the sources that I like the best?
Yeah, I listen to I've listened to a lot of like different I mean, besides like the Joe Rogan and politic type podcasts, I mean Bigger Pockets is huge. I like
Mhm.
listening to that just because they get different types of people on the show, whether it's somebody that's in 2 years of investing or somebody that's been doing it for 20, and you get to see other markets because we're just in Spokane here, and I don't really know what's going on in Seattle or California or Georgia or Florida, and they bring in people from all different parts of the country that are in different markets, and it's nice to see what other markets are looking like, and then you can kind of pick up on like what different niches people are doing, and then you can see if you can incorporate that in this market.
Mhm. Yeah, I love that because it's hard to find mentors close by, but
Hmm.
we can find them online, especially when it's like the top of the top, the cream of the
Right.
crop.
Yep.
That's what you want. All right. Do you have any like bad recommendations that you hear in your area of expertise, like getting into lending or just that lenders give out to people that you just completely disagree with?
Oh man, there's probably a lot. Yeah. Um, just like in real estate, there's, lenders or companies out there that might not be giving the right information, whether that's because they're a newer loan officer or they maybe are just lackadaisical in their job. And so, I mean, you can find that in any industry, whether it's construction, real estate, finances. And so, I mean, it is important to like know who you're getting your information from. That's why a lot of our business is referrals. Like 95% of my business is referral, and so whether that's from a realtor or a past client. And so I would say if somebody's referring you to somebody, whether that's a real estate agent or somebody that's used this person before, I would say that is probably more trustworthy information or referral rather than just finding somebody online, because you don't know this person from anybody. So if it's your realtor recommending somebody or somebody that's used this person before, that's probably a pretty solid recommendation, or this person wouldn't be referring that lender or that institution. Um, but yeah, like bad information. I mean, I can't say how many clients I've taken over that have gotten 4 or 5 different denials from other companies, and we've been able to get them approved. And that could just be because maybe these other companies have different guidelines and maybe ours are a little bit different outside the box, or maybe I'm willing to do a little bit more work on their credit or thinking outside the box on getting them from not approving to approving. And so it doesn't happen all the time, but if somebody does get turned down by a specific company, it might be worth getting a second opinion. I'm always an advocate for that because you shouldn't just take like going back to, always like never giving up. You shouldn't just take like one no for an answer. It is helpful to get a second opinion sometimes.
Nice. Hear that, guys? So if you do want to buy a house, make sure you talk to this guy before you just give up on your dreams. All right. And in the past 5 years, what have you become better at saying no to?
Ooh, that's a good question. Hmm. I would say, say, I would say 5 years ago, I said yes to this too much, which was just being a workaholic, and it's something I've been trying to change more recently. Is because it's easy. I find it easy for myself to overwork, and so I've had to say no to like taking on bigger projects, whether that's uh, specifically like some of my rentals and stuff. It's easy for me to say, oh yeah, I can go do this, but it's better for me to say, hey, let me go find somebody who can do that, even if I have to pay them a little bit more money,
Mhm.
just because that frees up my time. So really, because time's probably like the biggest asset we have, and so if you can really expedite your time, and if you have somebody that can do the same job, even 80%, and you can pay them like $50 an hour, but your time's worth more than that, it makes sense to do that every time. So
Mhm.
that's something that I've learned is trying to delegate more and not do everything yourself because I have the tendency to try and just do everything.
Yeah. Yeah, I hear you there. I feel like I'd rather, well, it only takes 10 hours to learn this
Right.
skill, so I'm going to try and do it myself versus like I could just pay somebody to do that. And now I don't have to spend the time to learn how to do it and then keep doing it every single time.
Yeah.
Like editing photos is so tedious.
Hmm.
So it's like just pay somebody else to edit them.
Exactly. But then that
Go,
frees you up to go do stuff like this or go sell real estate or
yeah, do
do
10
something
other
else.
things.
Yeah.
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 Yeah, I hear you there. That's something I should probably work on too.
Yeah. It's something
Yeah.
I'm constantly working on.
Yeah. Nice. All right. So this is the last one from the book, and then we'll hop into some lender specific, real estate specific, and
Great.
kind of your journey questions.
Yeah.
Actually, let's check our time. Yeah. So we probably got time for this last question, then we'll take that little break. When you feel overwhelmed or unfocused, what do you do, and what questions do you ask yourself?
This is probably kind of a funny one. When I first got into lending, so actually, let me take it back. I learned how to solve in a Rubik's cube when I was like 10,
Nice.
and so
Same.
yeah, and so
Yeah.
and so when I got into lending, I had one in college, and I would like during finals week, if I would get super stressed out or just like overload of information, I'd go take like a 5 minute break and just go solve it or whatever. And then so when I
Nice.
got in lending, your first 6 months, it's just you're drinking through a fire hose. It's just way too much information coming in at once. You're learning so much. Probably the same when you got into real estate. The first 6 months is just crazy,
Yeah.
crazy
It's
amounts
like,
of
oh my
information.
God.
Yeah. And so when I'd get overwhelmed, it would just be something as simple as, hey, I'm gonna take a couple minutes, turn aside, and I would just decompress. And that's all I need, and then I could get back in it and just roll.
Nice. Yeah. That should have been your unusual
I
habit.
should have
Yeah. When
been.
I'm stressed, I solve Rubik's Cubes. Like nobody else does that
Yeah.
except for maybe me and a couple other nerds out
Yeah,
there.
and then I honestly haven't done one for like the last 3 years, and I like kind of forgot how to do it, so it took me like 20 minutes to relearn how to do it.
Yeah. Did you ever time yourself for like a fastest time when you're at your peak?
The best one I think was like barely over a minute. It was like a minute
Mm.
20 maybe, minute
I
15.
could never get under 50 seconds.
You
Like
broke a minute though?
I broke a
Nice.
minute in like I want to say somewhere in high school.
Yeah.
As I got to a point where I just like always had one in my bag.
Mhm.
I do it on the bus. I do it when I was bored. So it was like it got to a point where I could get down. And you know how like sometimes you have to redo a step two or three
Mhm.
times because it's like,
It'll
oh,
set you back.
yeah, it's like, oh, well, when you're trying to build up from the bottom and hit all the middle pieces, sometimes they just fall into the right place and you only have to
Yeah.
put two in, or like you hit the end and, do I have to do this step two times, one time, three
Mhm.
times? Like sometimes you
And
just
if you
go
get
round and
lucky,
round.
then that's where you got it quick.
Yep.
Yeah.
Yeah. I hit a point where it was like I was just getting every
Everything
once in a
just
while.
clicked.
Yeah. It
Yeah.
all clicked. Someone was timing me at the time, and I think it was like 52 to 55 seconds.
That's great.
And I was like, hey, I got lucky on this one, but I'll take it
Nice.
because usually I'm somewhere in that like minute to minute and a half,
Mhm.
unless you get one of those super lucky ones.
Yeah.
All right. Well, we're going to take a quick break, guys. Tune back in so you can hear more about Hunter's story, getting into lending, and where he's going after this. We'll see you soon. All right, guys, we're back. I got Hunter Zier on the podcast, and now we're going to be going over a little bit more on your story, how you got into
Mhm.
lending and just kind of your investment journey, where you'd like to go from here
Yeah.
and all that fun stuff. So what is it that brought you into the lending world?
Yeah, so I was going to college, graduated back in 2017, and then, of course, like any normal college student, your senior year, you're looking at kind of what you're wanting to do. I was graduating with a marketing degree, so business, and I knew I wanted to get into business in some way, shape, or form. And marketing degree was really good. And then growing up, my parents were in the real estate world, like developers and builders, and I knew that I really liked being in that world and I didn't know how I could get in it. And really, the only thing I knew was like becoming a real estate agent. And so, like my senior year, I was kind of looking into doing that. And then I heard of like a mortgage loan officer. And I really enjoyed finances. And so I was like, okay, well, this seems really cool. So I was like kind of debating whether to do the real estate route or do loan officer because I really wanted to get into real estate. I just didn't know how. And
Mhm.
so my dad knew my owners of Heritage, and he was like, "Hey, just go job shadow with them." And so, like on a Christmas break, flew back to Spokane and job shadow with them for a couple days. And I was like, "Man, this seems like really hard because I literally had no idea what a mortgage was. Like, I didn't know anything about the lending world." And I was like, "This seems kind of difficult. Like, I like a challenge. I'm game."
Yeah.
And so I kind of took the leap right after graduating in 2017, and then the rest is history. So I've been doing it for 6 years. Yeah.
Nice. Where'd you go to college at?
I went to school in Oklahoma or
Okay.
Roberts, ORU.
Nice. So
Yep.
yeah, you were down there. Did you go your whole 4 years?
Yep. All 4 years.
Nice. Came back, what, 22, 23, and that's kind of
Hmm.
when you jumped into.
Yep.
Nice, nice. What
Yep.
was it that really set mortgage apart from real estate? Was it just shadowing them and being like, okay, I'm going to do this instead? Or was there something with real estate where you're like, I don't like that, but I do like this with mortgage?
Yeah, I mean, I definitely I was kind of torn because I really I talked with a couple realtors that that I knew just through my family, and I was like, man, I could see myself doing this, and so it was really a battle that I had, and oh, we got a guest here.
Oh, what's
Look at
going
this
on?
guy. And so yeah, it was really a hard decision. And really kind of the defining thing that was a deciding factor for me was the finance piece because going back to what I was talking about in the beginning, like I really liked stock trading and looking at companies, doing evaluations, looking at profit and losses.
Mhm.
And I took finance courses in college and I enjoyed them. And so I was like, I think this is going to be better for me. I think this is kind of what I'm more gifted at is the finance piece, but I still really liked real estate. And that's why I think that I'm still doing real estate investing because I'm super passionate about it. And maybe that's why I work well with realtors too, just because I can kind of see eye to eye with you guys on like what
Yeah.
you guys go through on a daily basis, just because I grew up around that. And but I'm like with the finance piece, I eat it up.
Nice.
Yeah.
Nice. How long were you a mortgage officer before you bought your first rental property?
It was like 3 years. Yeah,
Nice.
2 or 3 years. I took well, because the first year, like, I mean, I'm sure you can attest to it. The first year is brutal.
Mhm.
Like, going 100% commission, jumping off the deep end, it's very risky. And so I didn't know getting into it if this was gonna be my thing. I didn't know if I was gonna be successful at it. And so I gave myself a year commitment, and I was like, "Okay, if it doesn't work out in 12 months, then maybe I try something else." And it worked out for me, but in that first 12 months, I was like, I'm not going to buy a real estate property if I don't even know if I'm going to stay in Spokane. Like, if this
Mhm.
doesn't work out, I might have to leave the state. So I wasn't going to do any investing if if I didn't know if I was going to stay here for sure. And so, like, that's why I think, like, for some people, maybe today's not the best time for you to buy a property because maybe you're in the same situation. Maybe your job isn't secure. Maybe if you don't know if you're going to stay here for, the next 2 or 3 years. But once you make that decision, I'm a huge proponent of starting investing and, getting into the home buying journey.
Nice. And when you bought your first rental property, was there any huge mistakes or red flags that went off for you? Was there any big learning lessons with it? Or was it, basically a piece of cake?
I had probably walked, over maybe 10, maybe even 20 other properties before I even made that offer on that property. And I'd probably looked at maybe 100 other properties. And then I'd probably literally watched 50 hours of Grant Cardone on YouTube or more. Like I've been watching him since I was 18. And so like
Mm,
just soaking up as much because the guy's like a real estate mogul. And I just learned as much as I could. And I took as much as I learned from him and just watching him on YouTube. And I just kind of rinsed and repeated what I learned.
nice.
Yeah.
Nice. Was there anything that, like, when you bought that first property, you're like, "Oh, I've made it," or was it just like, "Okay, finally, I've done what I've been wanting to do since a young age. Now I got to keep going."
Yeah, I think your first property, I mean, you could probably attest to this too. Like your first property is probably like the most important buy you make just because it's the most you're going to learn. And so for me on that one, uh in maybe a lot of people won't do this, but like I literally gutted the whole thing. And it was a duplex and so there with unfinished basements on either side. So I
Mhm.
took the next 8 months and I did the whole thing myself.
Did you live in it when you were doing all this? Like,
Mm.
live in one side, rent out the other, you
I
just
just straight
gutted
up
the whole
bought it as a
thing?
rental. Yeah.
Nice.
Yep, but, I was thinking about it, it just didn't work out.
Gotcha.
So, like, I actually I rented, up until, like, last year.
Gotcha.
Or no, back the end of 21, so about a year and a half ago.
So you were just like, "I'm gonna
Buying
buy rental
rentals. Yeah.
properties and I'm gonna rent at the same time rather than
Mhm.
just living in one,"
It's
and
kinda reverse, like, Zach wouldn't agree with me on it, he gives me shit for it, but, it's just what made sense to me because I was just stacking cash and buying rentals, so, like, I would go broke, then save more money, go buy another rental, go broke, and, like, that's I just kinda kept doing that.
nice. Nice. Have you ever had any really big problem tenants, or have they all been pretty smooth so far?
I've gotten lucky. I haven't had
Nice.
any big issues. I had one guy actually. I mean, this wasn't a big deal, but so I have a fourplex in the valley, and it's kind of kind of funny. This was like 2 years ago over Christmas. The husband and wife had in one of the units had a fight, and so the wife kicked out the husband, and so the guy literally in his little like Subaru was parked outside the fourplex, and he had an extension cord going from the top of the fourplex running outside. And there's like 2 foot of snow on the ground.
Jeez.
And so he was running it from their unit all the way outside, like through the parking lot to his car, just like for heating or something. I don't know. And like I was like, man, yeah, that's like a major health. Like you could start the whole building on fire. So
Yeah.
I mean, besides that, it's kind of funny. But the guy, I mean, he was like, okay, and then he, fixed the problem. But it, yeah, just some
Gotcha. So
weird
nothing too
instances.
bad
Yeah,
where people are like, "Well, screw you," and then they go put concrete in the bathtub or something like
that would
that and turn
suck.
the water on
That would
or
suck. No, thankfully, no.
yeah.
Just
Yeah.
normal stuff as being a landlord. I know
Yeah.
I've probably gotten lucky, but for me, like location's key. So like I try and buy in a really good area. I make sure like all the units I bought, I've put money into them. So like made them nice, remodeled them. And so you make the unit really nice in a good location and then you get a good tenant. And I think like, if I think depending on your price point as well. Like my units are a little bit bigger, so your target audience is a little bit different, and so
Mhm.
the clientele that typically want my units, they're maybe families or people that will stay in there for an extended period of time, and typically they take care of the units.
Yeah,
So.
hopefully it's a couple years and they have some
Mhm.
ownership in it.
Exactly.
Do
Yeah,
you give
because
them
their
any
turnover, that's where you start losing money
Yeah.
if you have a lot of turnover.
Do you give any discounts for like, "Oh, you mow the lawn and you take care of things and you do this and that, like, I'll give you a little discount," or
I
do you just
typically
kinda
don't. Yeah, I
Gotcha.
try I try and make that separate. Like you'll have some tenants that are like, "Oh, I'm a contractor on the side. I'll fix the toilet and take $200 off my rent." I try and stay away from that just because
Mhm.
there's liability in it.
Gotcha. Gotcha, yeah. When I had a tenant in our side for our first duplex,
Mhm.
we used him to redo both the decks, and we gave him a rent credit for that.
Nice.
And I heard some people were like, "Oh, you shouldn't do that because this, that, and the other thing." But it ended up working out. It took
That's
him
good.
a lot longer than it should have.
Mhm.
Granted, it wasn't his fault, but it still sucked.
Yeah.
And the story behind that was his ex-girlfriend got a restraining order against him on the property, and this all happened right before we bought it and moved in.
Oh my
So
gosh.
apparently they got into a big fight. He kicked her out because he's on the lease, but then she went to the cops, complained,
Mhm.
and this is like the third or fourth time she'd complained about an ex and said that there was domestic abuse and stuff like that.
Wow.
So he was able to get it dropped, but he had a restraining order against him coming to the property he lived in and was doing work on. So I had one deck that was half finished and another deck that was torn down to just the studs for like 2 months in the
Oh
middle
my
of the winter,
gosh.
and we were trying to get it done before winter started. So it was
And then
like,
now you're delayed because
yeah,
of
and then
winter.
we got delayed all the way till spring, and it's like, I don't really need to use the deck over the winter, but it
Yeah,
would be nice to use the back door.
right.
Like, I have a 10-foot draw, or not a 10-foot, I have like a
It's a
6
pretty good
foot,
drop.
yeah, 6, 8-foot drop down to the ground, and I have 3 boards that I can stand on, and then the rest is all just, just the frame of it.
Did you do any work inside, or was it pretty clean when you bought it?
Oh yeah, we didn't gut it, but we tore all the carpet out, new flooring throughout the whole thing,
New paint?
new paint, new
Nice.
lighting fixtures. There was a big hole in the wall that we fixed.
Mhm.
New hot water heater on one side, all new appliances.
Nice.
The only thing we didn't do was tear out all the cabinets. Like we kept the boxes and just stained them on one
Oh,
side,
nice.
and then we put all new hardware on them. And now we're doing the rollers. We still haven't gotten to like the rollers on the
Mhm.
drawers
Yeah.
because I was like, I mean, these are okay. Looking back, it would have been better just to, like you said, pay somebody, pay somebody and just have it be done.
Yeah.
But we're like, why not make a 3.5 year project out of the
Mhm.
place we're
You've had
living
it for,
in?
like, almost 4, right?
Uh, we're going into, when did we get in? 2020. So yeah, this will be year 3.
3, okay, yeah.
Yeah, so this
Yep.
will be year 3 that we're in there. So yeah, now we're starting to look at new places, which is why we're sending all our info over to you
Yep.
guys and trying to get everything ready to go.
Mhm.
So when we do find a nice property, then we can actually pull the trigger.
And I feel like a lot of people, I mean, especially like for when you bought your first one, like a lot of people, especially like younger people, don't think, hey, like maybe I should look at multifamily. And I don't
Mhm.
know, maybe they just don't like know about it, or maybe they're like, I don't want somebody next door. But I mean, it's a huge investment opportunity,
Oh
I
yeah.
think. Like you're saving so much. And then when you move out, you're gonna rent it. And then now you got boom, you got 2 doors, you got
3
cash flow,
doors,
3
cash
doors.
flow.
Yeah.
Like, yeah, I'd love to find just a shitty little triplex somewhere. That's
Yeah.
kind of the goal is just
Hmm.
find a shitty triplex in an okay area. Hopefully it has a garage and then just fix it up and make it nice
Yeah.
and raise the rents.
And you guys are in a really good area. I mean,
Mhm.
that part, that's heart of the valley. It's
Yeah, I
freaking
wanted to
awesome.
buy your duplex. It was a couple doors down. When
Really?
I saw that come on the market, I was like, I'm gonna buy this
That's
fucking
funny.
thing. And I waited a week and it was under contract. I was
Yeah.
like, damn it. It's
Well,
like,
when I
should have
bought
done
it,
it.
dude, there was like 10 offers on it. This was like right after the pandemic.
Mhm.
And I think like right when COVID hit and the market just like blew up and like in a crazy way. And, or it was maybe that summer or something. And it was
Mhm.
just like, the competition was just insane.
Yeah. Yeah, and even when you were selling yours, the one next door to me just sold.
Hmm.
Yours sold for what, 474,
When I sold it,
475?
yeah,
Yeah.
yeah, I think we were at, yeah, in the 470 range.
Yeah.
Hmm.
So mine's almost like a mirror image of yours, except we have a 2-car garage on the master or
Nice.
the live-in side. And then we just redid everything.
I mean, mine was not in good shape.
Fair
Like,
enough.
yeah, I guarantee yours is nicer, so you could probably get more.
Yeah, and when we got ours, it was like 350, so it was
Nice.
pretty cheap when we
Yeah.
got it. And then the one next door to me just sold for 575.
Holy cow.
And that one's a
Is it across
3
the street?
No, it's right next door to me.
Okay.
So across the street is the back of somebody's lot because
Okay.
I'm on kind of towards the corner.
Yeah.
So right next door to me is a 3-bed, 1.5 bath each side, but it's just a carport.
Mm,
And I wanted to buy that one, but I'm like, oh man, 575 is just a lot.
that's a
And
lot.
I was like, I thought 475 was high. I should have just bought that one because this 575 is
Yeah.
just not going to happen.
Yeah.
So, but they bought it, they rented it out, and whatever they're doing now, that's awesome. At least
Yeah.
we got new neighbors because when we first moved in, those people were crazy.
Oh my gosh.
Like the husband and wife screaming at each other, and then they broke up, and then they moved out, and then they sold the
Jeez.
property, and they were just the renters.
Wow.
But it was like, well, at least we got new people.
That's good.
now. So, how many rentals are you up to now? Do you have plans on expanding into bigger commercial stuff? Kind of where are you now, and where are you trying to go here in the next couple of years?
Yeah, so I only have multifamily besides like I have one single family. So I have 10 doors and kind of a mixture of a couple duplexes and a fourplex. And actually, one of my duplexes has a secondary shop behind it with a separate entrance and a separate
Nice.
meter. And so I rent that out too.
That's
So,
awesome.
so that's pretty cool. So I kind of have like on that one property, like 3 different income sources, which is nice. And like that's what's really cool. Like there was one in the valley. There was a duplex, almost same setup as mine. It just sold with a shop, separate entrance, separate meter. And I was just looking at it online, and I was like, that's a good deal
Mhm.
because whoever can that's three income sources, and now you're going to cash flow because that extra piece of income. Like right now, it's hard to make the numbers work on multifamily, even if you're putting a huge amount down on it, just
Yeah.
because of the rates. Like it's hard to be able to cash flow it much at all. So, but you can still find them. You just got to know what you're looking for, crunch the numbers, and the numbers don't lie. You know,
Mhm.
if it makes sense on paper, then I think it makes sense to jump on it. But going back to your question, I bought a lot back in 2019 from my dad. It's off of Sullivan, and I basically just been sitting on it. It's just raw land,
Mhm.
but it's ready to develop. It's already developed. I pulled permits on it like 2 years ago to build a fourplex, and I've just been chilling on it. But I think I'm gonna break ground on it this year. I
Nice.
know Zach gives me crap for it because I've been saying that for like 3 years, but I'm planning on probably October this year to break ground.
Nice,
Yeah.
nice. And do you have an idea of how much that's gonna cost? Because 'Cause I've never really gotten into.
It's not gonna be cheap.
Yeah, I wouldn't imagine so.
So the current plans I have approved are it's all one level, so it's a rancher style fourplex. The side units are going to be 3 bed, 2 bath, 2 car garages, and then the inside units are 2 bed, 2 bath, 1 car garages.
Nice.
So the building's basically like 135 feet wide. It's got its own private drive. It's in a really nice location. I was like 2 years ago. Originally, I'd switched the plans over to like a stacker style fourplex
Mhm.
where each unit was like 1,900 square feet, 2 car garages. The building was a little bit skinnier just because now everything's two level.
Yeah.
But the cost to build it was literally going to be like $1.5 million.
Dang.
So now that I shrunk it, basically the outside units are like 1,450 square feet and the inside ones are like 1,150. So the floor plan's way smaller, and I'm thinking I'm going to land somewhere like 850 to 900. So for a 4 unit, that's not bad.
Yeah, that's a little bit
A
better.
lot better than, yeah,
Yeah, the
1.5. Yeah.
1.5. Yeah,
There's
awesome.
way too much to bite off.
Yeah, that sounds like a big chunk of change right
Yeah.
there. So are you gonna be doing, like, a HELOC on some of the properties to pull money out and then just, like, get started, or you just kinda,
Mhm.
like that's kinda what you've been waiting on, it's just like.
That's pretty much what I've been waiting on. So, Zach brought in a gal from Umpqua, and basically she's a commercial lender. And so, I'm looking at probably doing like some type of business loan or commercial loan. You might want to call it through Umpqua, and then I'm probably going to do at least one or two HELOCs on one or two of my properties.
Nice.
So there's two that I have a decent amount of equity in that I'm probably going to do some lines of credit on. So I'm going to be more like cross collateralizing on this one just to make it easier because I could do a construction loan, but I'm like I'd rather Umpqua has some like really cool like unsecured products. They might secure it to some of your properties, but if
Mhm.
I have like less hands in the pie, it's going to make the construction process way easier.
Nice. And when you were starting to build up your portfolio, were you investing with outside investors? Did you have people that were just kind of silent investors like, oh, yeah, we'll go 50-50, or are they just all yours where you're like, I'm going to save up, I'm going to buy this, it's going to be mine, I'm going to do the work on it or pay
hmm
someone for it?
Yeah, so my first couple ones were like I just did them on my own. My dad and we went 50-50 on a couple duplexes, one that we sold, and then one we currently have that we're remodeling. So it is nice that I went 50-50 with on them, not just because it's less down payment because you're
Mhm.
splitting it, but then also like just resources wise, like if we're gonna go remodel it, it's a lot easier having two heads and two guys that can like, hey, call the plumber, need to get in here. Okay, cool, I got that, or he's got it,
Mhm.
and he's got a little bit more time on his hands. So if you can partner with somebody, it's got to be the right person for sure, like somebody you
Yeah.
trust. And as long as you guys have an operating agreement, like my dad and I still had like we made sure we did it in an LLC, operating agreements, split bank accounts, all that. As long as you do it right, then I think it's a great idea.
Yeah, I'd love to be able to invest with my family and do some
hmm
of that stuff because my dad used to be in real estate and
Yeah.
he still has a couple rentals. But I've heard some horror stories and he's gone through a few where it was like he'd buy some. He has one buddy he's invested with and it's always gone good.
hmm
But he's had a few other friends where it was like the investment was great, but then when there's problems, there's usually one person picking up the slack for the
Mhm.
other person, or like, well, who's paying for this? And the person's like, man, I bought this because it was supposed to be an investment.
Yeah.
You take care of it. And it's
Mhm.
like, well, what are you going to do? Just be like, well, no, let's just let the property go to shit. Like, no, someone has to step up and do it. And
Yeah.
usually it ended up being him.
And then the problem is too, it's like, well, what if one person wants to sell and the other doesn't?
Yeah.
So yeah, you got to make sure it's the right person for sure. That you guys have the same goals. You do the paperwork the right way. Do it all legal, LLC, and and then yeah, I think it's a great idea if you're doing it with the right person. But definitely you got to be careful,
Yeah.
100%, because you could get burned.
Yeah, I've heard some horror stories. I know
Hmm.
Zach says he'll never do another deal with somebody else
Don't
unless it
blame
was
him.
like
Yeah.
the right person, because I think
Hmm.
he got burned once or twice with
Probably.
something, because
Yeah.
never really asked him about it, but he seemed like he was pretty set. And I was like, well, something must have happened.
Hmm. Probably.
Yeah.
Yeah.
So understandable. And past that, when you started getting into lending, what was like the biggest hurdle for you, do you feel like?
Yeah, it's probably what a lot of loan officers struggle with in the beginning is just getting people to trust you. Because
Mhm.
when you're new, it's tough. It's just like, I mean, you can probably say the same thing. It's like you're trying to get experience, but now you have to get people to trust you with their deals,
Mhm.
but you don't have any experience. But to
Yeah.
get the experience, you have to get deals.
Yep.
But to get deals, you have the experience. So it's like you're kind of it's really hard to really tread the waters as a new realtor or a new lender. It's not easy. And but I mean, I personally think it's worth it in the end. You know, if it's you know, if you're meant to do it, you know, because I think it's very rewarding. But you know, building the business is it's not easy. But really, for me, it was I just was honest with people and I wouldn't bullshit them. And like when I'm trying to earn a realtor's business, I would just tell them like I'm going to work harder than any other loan officer you've worked with because I know my work ethic is probably better than most people's. And so I will literally grind my fingers to the bone, even if it's going to take 12 months to get somebody approved. And so
Nice.
that would usually someone's like, okay, I'll give you a shot because it's like, hey, this kid or this because I was 22, they're like, oh, who's this kid?
Yeah.
But you know, if they saw me and if I was able to come through and get somebody that was like denied or get somebody that another lender just turned away because this there's nothing out of there. It's not going to hurt the realtor. And
Mhm.
so if they're like, yeah, here's the first time home buyer that got denied, let's give you a shot. And if I could turn it around for them, then now I just earn their trust, right? But it's hard for a lot of people because like, as a new loan officer, you don't really know what you're doing. So you
Mhm.
got to have a really good team on your side. And so that's what I had was I didn't, you know, if I didn't know the answer to a question or I didn't know how to do this deal, I'm going to find out how.
Good shit. All
Yep.
right. Well, we're coming to about the end of our time. Is there anything you want to tell all the viewers at home before you go, or any advice that you'd give to anybody out there, either thinking about becoming a loan officer or just getting into real estate in general?
Yeah, you know, I would say, you know, talk to somebody, whether it's a realtor that you know, whether it's Casey, talk to a loan officer, just gather as much information as you can find because your real estate agent and your loan officer are probably going to be the two pieces to your journey in investing in real estate, or even if you're just only going to buy one house, those two are going to be the biggest advocates in helping you along the process. So get people that you trust and people that either come highly recommended or people that we like, know, and trust because they're going to be, you know, out for your best interests and you want to have the right team on your side. So that would be what I say. And I appreciate your time, man. It's been
Yeah,
awesome
I
hanging with you.
appreciate yours.
Yeah.
Thanks for coming on, and
Yes, sir.
we'll have to lift here soon.
Okay. Awesome.